Imagine two Kirana shops. Kirana shop number 1 is generating, let's say, 1 lakh rupees of cash profit every single year, while Kirana shop number 2 is generating 10 lakh rupees of cash profit every single year. Now the question for you is, out of these Kirana shops, if they wanted to grow faster and open multiple Kirana shops, which one has the potential to achieve faster growth rate? Now it's not a trick question at all. The answer is very simple: Kirana shop number 2. Why? Because Kirana shop number 2 is generating 10 times more cash profits, and therefore if they reinvest back this 10 lakh rupees into business, they have the potential to grow faster if their management takes that action. Exactly the similar concept is followed in stock market. Whenever you are looking out for good quality stocks, one of the very important criteria is to look at the cash flow of a particular company. Because if a company is generating good cash flow, then the potential is there. Whether the management utilizes that potential or not is a secondary thing, but the potential is there. A lot of people don't even know how to go about finding those quality stocks that are generating good cash. Therefore, in this video, what I'm going to do is walk you through a simple filtering method of how to go about finding quality stocks using the cash flow criteria. If you don't understand anything about cash flows, please don't worry. In the next few minutes, I'm going to teach you something that is very interesting and important for your equity research. If you don't know me, my name is Rahul Jain, and if you're new to my channel, don't yet subscribe to my channel. Watch this video for the next 4 to 5 minutes, and I'm sure you're going to learn something new. And if you learn something new, hit the subscribe button. With that, let's get this video cracking. For this, I'm heading to a website called Ticker Tape. I've given you the link in the description and in the pinned comments. If you want to follow along, you can click on that link and follow through, because you are going to learn practically. First thing I'm going to do is I'm going to go to screener here and click on the screener. And here you should click on stocks and then start screening. You are going to see a list of more than 5,500 stocks here. I have deliberately hidden the name of the stocks because I really do not want you to focus on the name of the stocks and get carried away. Our intent is to learn about how to go about filtering out, let's say, 20 to 30 stocks from this huge list, right? I'm going to focus in this video on small cap cash rich stocks. You can apply the same logic for mid cap or large cap, that is up to you. But I'm going to show you for small cap so that we have a smaller universe to look out for. So first thing I'm going to do is click on small cap here, and I'm going to also put another filter here, that market cap. I want all the companies that are more than 10,000 crores of market cap. I don't want to go to, let's say, smaller than 10,000. So I'm going to simply type 10,000 here and just press on enter. I get rid of a lot of micro cap stocks here. I've got 320 small cap stocks where the market cap is higher than 10,000 crore. I'm happy with this as my universe. And as I said, you can select whether mid cap, large cap, and play around with this market cap depending on your portfolio, depending on what you're looking for. The next thing I'm going to do is I'm going to add a filter here. And the first filter that I'm after is 5-year operational cash flow. So if I type 5Y here, you are going to see 5-year historical operational cash flow growth. This is very important parameter. It is going to tell you, if you look at the last 5 financial years, how the operational cash flow of the company has been growing. This is a very important parameter, because net profits will only tell you how much of net profit a company is making, which is a very important parameter as well. But here it will tell you, out of that net profit, how much operational cash is being generated. Okay, because net profit, please remember, has a lot of non-cash components, like depreciation is accounted for in the net profit. But operational cash is very different. It's all about cash there. So I'm going to click on that and look at those companies here. So let's put that filter out here. And here, if you come down and only select those companies that have generated positive operational cash flow growth in the last 5 years. So I'm going to simply say 0 to higher, and that will get rid of 50% of the small cap stocks. So here, this list here, 163 stocks are the stocks that in the last 5 years, if you go back, have generated good growth rate, positive growth rate on the operational cash flow side. That's filter number 1. Now 5 year is a good period, but what about the recent fiscal year? It's very important that we also look at the recent trend that is happening in a particular company. So I'm going to add another filter, and rather than 5 year here, I'm going to go 1 year. And here you will come down and see 1 year historical operational cash flow growth. When I'm shooting this video in November 2025, it's going to look at FY25 and FY24. And it's going to only take those companies where in FY25 they have generated positive operational cash flow growth. So I'm just going to click on that. Again, here I'm going to say only give me the positive one. So 0 to higher. And here again, I get rid of few companies, around 50-60 companies I get rid of. Here I get a list of 107 companies, and these 107 companies in the last 5 years have given me very good operational cash flow growth rate. And in the last 1 year also, they have given me positive operational cash flow growth. These two are important parameters. Now what we're going to do is move to the next one, which is forward. This is very, very important here because this is going to look at the estimates, because the last two filters that we have used is all historical data. But now we are going to look at futuristic forward looking cash flow growth rate. And for that, here is a parameter here. If you come down here, look at the 1 year forward operational cash flow growth. What you see next to it is a blue symbol here. This means it is only available for the Pro subscribers. Now I have the Pro subscription of TickerTape. So let me now click on 1 year forward cash flow growth rate. This is just an estimate, and I'm going to now get rid of all the companies that are projecting the negative operational cash flow in the coming year. So if I say 0 to positive, then here I only get to 46. Remember how it is now shrinking from 107 stocks to only 46 stocks, because these 46 stocks are estimated to have positive operational cash flow growth in the next year. These are forecast, of course, there is no guarantee here, but this is based on a lot of analysts that feed into this particular analysis. Now, the next criteria that I'm going to use here is I'm going to also look at net cash change. So if you talk about the cash flows, you have three components. One is the operational, investing and financing. And then you have the net cash flow position if you read any cash flow statement. So what we're going to look at is the net cash flow change. So for this, I'm going to type net change in the cash. So it comes here. So this is the overall cash position. So what I'm going to do is click on it and only want those companies where the net change in the cash, not just the operational flow, net change in the cash is positive. So 0 to higher. Again, I get rid of a few companies there and I'm left with now 29 companies. Last two parameters on cash that I'm going to apply is, first one is going to be the free cash flow. Again, if you're not familiar with these concepts, I request you to read about them. They are very, very important for your equity research. So I'm going to say free cash flow here, and this free cash flow is simply meaning that if from the operational cash flow, if you remove all the capex, the capital expenditure, do you still have money left? That's what the point is. And if you have the money left, this is even better from a positioning perspective. So I'm going to say, give me all those companies where the free cash flow is more than 0. And now I get to 25 companies. So these are the 25 companies that are cash rich company. We started from a list of 320 and have narrowed down to 25. Now I'll tell you the magic of these filters. For example, if I put another filter here and show you the ROCE, ROCE of these companies, so return on capital employed, if I add that, what you note here to the right, all these companies have delivered very good ROCE numbers. Can you see? None of these are showing negative return on capital employed. Why? Because if a company is generating good cash, invariably they are generating good return on the capital employed. Also, let me show you their earnings per share. So for example, if I go to their earnings and earnings per share, if I look at earnings per share here, you will find that here all the companies are profitable companies almost. You look at majority of them, they are showing you very good earnings per share in terms of the positive. It doesn't mean that these companies are going to give you price upside. Now we need to do further analysis. Let me pick up one example out of these stocks so that you understand how you can go and further evaluate these 25 companies, so that out of these 25 companies, you get, let's say, 5 to 7 good companies for your investment. Now, the first thing I'm going to do is I'm going to arrange these companies by the sectors. And why am I doing that exactly? Mainly because I'm only going to target the sectors that I'm interested in. For example, if I only understand IT and pharma and let us say FMCG, then I'll focus on those sectors rather than looking at, for example, construction. And I have no idea how a construction industry works. Now, for the purposes of demonstration, I'm going to stick to IT companies. And let's say I'm going to pick up this particular company here. Again, I am not revealing the name of this company because I'm going to show you some sensitive data about this particular company. And I do not want you to get influenced and look at the name of the company and go and invest in that company blindly. No, that is not the intent. Intent is for you to learn the entire process so that you can do it yourself. What I'm going to do is click on this particular company. And if I click on that particular company, I come to this screen. The first thing you see is the price chart, and that's what most people make their decisions on the basis of the price chart. We are not going to do that. I'm not saying the price chart is not important, but please understand, price chart tells you something about the demand and supply of that particular stock. But what we need to look at is the future growth prospects of this particular company. So therefore, what I'm going to do is I'm going to head down here. If you come down, you will find a section here which is called earnings per share forecast. This is the most important section in my view, because it is going to tell you what is the likelihood of the earnings growth of this particular company. Now, this feature is only for pro members. I've been using this ticker tape for the last 3 years and found this very, very useful. As you can see, I'm a pro member of this. Therefore, I'm able to show you this data. If you're not a pro member, I've given you the link. If you want to sign it up, go for it. Now, coming back to this particular company here, what you note here is that the earnings per share forecast depending on the analyst. So they have looked at various analysts and have aggregated the earnings per share forecast. It's just a forecast. It's not a guarantee, but I'll come to that in a minute. What you see is that the current baseline is 24 rupees 14 paisa is the earnings per share as of now. And the forecast is that if they achieve high growth, then it's going to go up by 35%. Median growth is around 30% and low, matlab gire se gira, is around 20%. That's the earnings per share growth is forecasted by the analyst. Now you would say that, Rahul, how can we trust this data? Absolutely, we are not going to trust this data blindly. What I did was, you can go into the earnings presentation done by the management. Here, for example, you will find those presentations, right? Here you go and look at the investors presentation. You open it, right? So I've opened it here. One thing that you will need to read and look at in the case of IT companies is the order pipeline. How is the deal pipeline or the order pipeline that is looking? Total contract value, annual contract value. These are the two important parameters when it comes to IT companies. I hope you are aware of these basic terminologies. If you are not, I would highly request you to read about a particular sector. I talk about a lot of those sectors, insights on my YouTube community. You can join that if you want to. I've given you the link as well, or simply go to my channel, find the join button and be my guest. Now, coming back to this particular stock here, look at the order book here, okay, or the deal pipeline. From Q2 FY25, where the deal pipeline was around 8,800 crores, it's now moved to 12,000 crores in a matter of a year, right? Q2 FY26 you are seeing. How much is this growth? I don't know. You can do the maths. Might be around 30-40% of growth rate here, which is very, very good growth rate in my view, right? Now, because of this order pipelines, maybe the estimates that analysts are giving. So if I go back to the analyst here, they are saying high 35%, medium 30%, low 20%. So definitely we can see that there is likely to be earnings growth rate for the next few quarters. Why? Because the deal pipeline is looking good. This is how you can go about looking at companies' fundamentals and always focus on the future forecast. Now, there may be some risks around this particular company. I'll come to that in a minute. Now, since you have checked the earnings per share growth rate, then you can further evaluate this company. If the EPS growth rate was not looking very good, you are not convinced, then you don't focus your time on that particular company. Here now look at the price chart. Let's start from basics now. Price chart, what is it showing you in the last 5 years? A clear graph is showing you that this company is very, very cyclic in nature. Here, for example, in FY22-23, their price fell down, then again went back up, then again came down. So what you are understanding here is that this is a small cap company, number one. Number two, the price chart is very volatile. Do you want to play out a volatile stock or not? You make that decision right upfront. If you say that, no, I'm not interested in such a company, then I'm not going to even look at this company further. But if you are fine with that, then yeah, that's okay. I'm very good with the volatile companies. Fine, then you can consider this for further analysis. The next thing you will look at is the analyst ratings and forecast. What is the overall sentiment? How many analysts are saying buy or how many analysts are saying sell? That gives you some sense. Again, you don't need to go by analyst ratings, but it gives you the sentiments in the street, what is happening. So here, for example, out of the 4 analysts that are tracking this company, 50% are bullish about this company, 50% are not. Here also, it shows you the price upside, earnings growth, revenue growth. These are pro features. Please do not blindly follow them. They are just the estimates given by the analyst. Now comes the business sentiment analysis. Also, you can look at in this particular tool here. It looks at the earnings call and it tells you what is driving the growth of the company and what are the challenges. So for example, strong financial performance, successful market expansion, innovative product launches. These are some of the growth drivers, which is very, very good in my view. If you look at the challenges here, what are the challenges? Their DSO is increasing. Their revenue variability and lumpiness is there. We saw that in the chart. More importantly, then you come down to the financial statements of a company. Here, what you need to do is again look at the annual growth view. I try to look at the growth view rather than the normal view, because normal view will tell you the absolute numbers. But if you look at the annual growth view, what it will tell you is the growth rate in terms of the percentage. What you note here is that FY 2023, the company did not perform well. If you look at the net income, down by almost 23%. Now go back to the price chart and see what happened in 22-23 in terms of the price. Exactly, this is what happened. The stock got hammered down. Why? Because the profit growth rate was not there in FY 2023. Stock was hammered down. This is how you could decide whether you take the entry or exit in a particular stock. Now coming down here, you can see other parameters as well in terms of the total revenue growth rate, the profit growth rate, and many other things. Cash flow, anyways, we had covered it in our filter criteria. If you want to go into details, you can have a look at it. Otherwise, this much is sufficient. Then you come down to a peer comparison in terms of PE ratios. So for example, this company's PE is at around 45 versus peers. Right? Some companies are trading higher than this particular company, some are trading at lower, so you can't really have much conclusion there, but their price to book ratio is looking very, very low. That's very, very good in my view. Now coming down, you can also look at the shareholding pattern. One thing that you must look at is the promoters holding. Total promoters holding, if you see a sharp decline, then that does throw a question whether it is a red flag or not. You have to go and check out why the promoters are selling that particular company. If there is a huge decline here, that doesn't seem to be the case. What about the foreign institutions? They are in fact buying this particular company in the last couple of quarters, right? Mutual funds, there is a lumpiness in that because possibly price is driving that particular behavior. But this gives you insights about the shareholding patterns. The last, not the least, you will have to check out, if you come down here, you will have to look at the news and the opinions. Very, very important. Look at the last 3 months of latest happening in that particular stock. For example, here their Q2 PAT went up by 94% year on year. So financially, the company is growing. We saw the order pipeline or the deal pipeline. That is also looking very, very good. This is how you can go about filtering down stocks from, let's say, 300 plus stocks to, let's say, 20, 30 quality stocks that are giving good cash returns in terms of their cash flow statements. If you want to do similar analysis, you can start using ticker tape and go to screener and do stock screening or mutual fund screening and start learning every single day. The link of ticker tape I've given you in the description and in the pinned comments. If you liked my method, request you to hit the like button. Let me know in the comments a simple thank you and subscribe to my channel so that you don't miss out on upcoming good quality content your way. Also, if you want to practically learn investing, you can join my YouTube community. I almost on a daily basis speak about various assets like stocks, ETFs, mutual funds, etc. that will make you a well-informed investor for a longer period of time. The feedback of this community has been excellent. Simply go to my channel, find the join button and be my guest. With that, I hope to see you in my next video. Until then, keep rocking.
Investment in securities market are subject to market risks. Read all the related documents carefully before investing.